developing economies from humbleness to leadership. From our next speaker, Mr. Deepak Parekh from Mumbai. He's a chartered accountant by training. He also happens to be one of the most influential businessmen in India. He's the executive chairman and CEO of the Housing Development Finance Corporation, HDFC, which he joined in 1978. And we're especially grateful for your presence during the Indian election. We hope you voted. We won't ask you how you voted, but we hope you voted.
Thank you, Mark. Good morning, ladies and gentlemen. It's a great pleasure indeed to be here today in the historic and pristine city of St. Gallen. The subject given to me by the organizers is quite elaborate, and the time is very short. I have to talk on leadership, on how Indian companies manage their companies. I have to talk about the financial slowdown and how is it impacted India. I have to talk about the HDFC briefly, of what I do, what I have been doing for the last 31 years, and all this in a matter of 15 minutes. So let me try and begin to try and do some justice to the three major subjects that were given to me today. Humbleness leads to leadership is a doctrine that has been professed by philosophers since ancient times. Right from the great teachers like Confucius and Plato to our contemporary gurus, all have emphasized the importance of this age-old adage. Most great civilizations had humble beginnings. And the same is the story for present-day economies around the world. The time is ripe for emerging economies, more so now than ever, to take a front-runner position in the international arena by rethinking various reforms. To say that we are in the midst of an unprecedented global financial crisis that has caught everyone unawares understates the obvious. The extent of damage may still not be entirely clear, though many are now hopeful that the worst is over. The IMF estimates that the total write-downs due to the financial crisis will be nearly $3 trillion by 2010. The crisis revealed that many of the financial systems were not foolproof. In fact, the whole financial focus had shifted from facilitating trade, from facilitating real investment, to innovative financial engineering that prospered on speculation. But with a change in the asset cycle, the missing links in the financial chain were exposed. Policymakers now have a key role in assuring that adequate steps are being taken to increase transparency in the financial markets. A single trigger, i.e. the collapse of the US subprime mortgage market, quickly spread through the financial system, eroding the value of capital, undermining the creditworthiness of major global financial institutions, and triggering massive deleveraging. The crisis, however, offers an opportunity for emerging countries to use their increased economic weight and take the lead in international policy. Reports indicate that the BRIC nations will have a combined economic weight equal to the original G7 nations by the middle of the century. These countries have benefited by opening up their economies and realized gains from the competitiveness of their enterprises in the global markets. Consequently, the share of emerging economies in the world trade and foreign investments has risen sharply over the years. As a result of their economic importance, newly industrialized and transition economies had a greater voice at the G20 summit in London last month in asking countries to desist from trade barriers and other protectionist measures, which have now been unanimously agreed upon. The other significant outcome of the G20 meeting was the pledge to augment resources of the International Monetary Fund and multilateral development banks so as to provide a liquidity cushion for global trade and global investment. Let me now shift focus closer to my home, the India story. Earlier in the 60s and 70s, India's growth rate was about 3.5%. This was the time when it was called, and often flippantly so, as the Hindu growth rate. Following the reform process in 1991, which essentially entailed opening up of the economy, India's GDP skyrocketed. Between the periods 2003 and 2008, GDP averaged 8.9%. The reforms prompted a dramatic increase in foreign direct investment, the cumulative amount at which stands at over 77 billion euros. As Indian companies gained scale and as Indian companies gained confidence, there was an increase in Indian investments abroad. Several Indian companies, keen to have their footprints in the global markets, acquired companies overseas. The reform process also fostered an increased pace of privatization, particularly in the financial services sector. This gave an impetus to the burgeoning information technology and outsourcing industry and brought about modernization of the telecommunications sector. So India's growth stemmed from the services sector as compared to China's, which is manufacturing oriented. For instance, IT outsourcing has helped in creating 45% of new jobs in India's cities over the past 10 years. Similarly, India has surpassed China as the fastest growing mobile phone market in the world, with 10 million subscribers being added each month. Even though the global slowdown has affected India's GDP growth, the official estimates are still pegging the growth at 6.5% to 7%, and it still remains the second fastest growing nation in the world after China. India was not directly affected by the financial crisis, as the banking system is not highly leveraged, nor is it exposed to excessive structured or derivative products. But with foreign credit drying up, companies had to turn to domestic banking system for credit. The substitution of overseas financing by domestic funding brought the credit markets under pressure, and as global markets worsened, the risk appetite of Indian banks also became adverse. Fortunately, regulatory response was swift. The Indian government and the central bank have together taken a slew of measures to stimulate the economy and infuse sufficient liquidity into the system. These measures, along with improved global liquidity situations, have had a positive impact on the Indian economy. Fresh foreign funds have started flowing into the country again. In fact, markets in emerging economies have rallied in the recent period, signifying that there is still an immense investment opportunities in these countries. India is a domestically driven economy and does not rely heavily on exports. Favorable demographics have played a role in consumption growth. Unlike China, where the population is aging and labor force is expected to peak in the near future, India's population, although India is an ancient country, it has a young population, with over 65% of our population under the age of 30 years. One of India's inherent strengths is that it holds the advantage of a low-cost, English-speaking and highly skilled workforce. India has the second largest pool and the fastest growing pool of technical manpower. Each year, and this is a staggering number, each year India produces about 2 million university graduates, which includes 650,000 engineers. It is still ironic that a country of 1.1 billion people is also struggling with skill shortage. Unfortunately, not all those graduates are directly employable. It is estimated that nearly 2/3 of the graduates need to be reskilled. This means the need for additional training is imperative. So how effectively we in India manage and train our human resources will determine its course of competitiveness in the global markets. What is unique about corporate India is that it has a judicious mix of family-owned entities and first-generation entrepreneurs. Family businesses have traditionally had a strong influence on the leadership styles in India. But from a governance perspective, it can be a double-edged sword. Family businesses can provide stable and family businesses can provide longer-term leadership, but face a number of challenges, including succession planning and family conflicts. But today there are several examples of family-owned entities that have complete professional management setup. On the other side of the spectrum are the Indian entrepreneurs, many of which who started out modestly have today become global companies. The best example of this is seen in the technology sector. In India, venture capital, private equity, and angel funding are slowly gaining ground, which will result in more entrepreneurial spirits being unleashed. Leadership styles of Indian entities tend to differ from those in the West. The rise of the Indian economy has shown that the country's leadership style can stand successfully with the Anglo-Saxon and the Japanese leadership models. For instance, many Indian business leaders tend to focus more on motivating employees and setting the right example. Interpersonal relationships with the employees are of utmost importance. Subordinates expect personalized guidance and personalized supervision. Indian leaders, on the other hand, assume the responsibility for the followers, and in return, they seek total loyalty. Most Indian companies, therefore, still do not prescribe to the hire and fire policy that is prevalent in the Western world. There is a saying in our ancient text, the Vedas, which goes as, "Let the good things come to us from all directions of the world." This can be applied to the management and leadership philosophy of India, which has been evolving over time, though the core principles have remained unchanged. It is clear from the history of Indian businesses that those who have survived through the years and grown to worldwide status today are the ones that have adhered to a clear ethical conscience. It is true that every corporate leader would prefer to lead during times of expansion and growth. Yet the test for management and leadership often comes during the time of crisis. While corporate India may not have been immune to the global crisis, it has certainly been better placed than many countries to navigate through the storm. Now let me very briefly introduce to you HDFC, India's first mortgage finance company. Needless to say, it is 31 years old, and I have spent 31 long years in this organization. Now you may reasonably ask and question, what is so unique about mortgage financing? But 31 years ago in India, this venture was looked upon with considerable skepticism. First, there was no institution in India that attempted to finance individual households. Second, there were no long-term institutions and long-term resources available in the country to finance long-term loans for homes. And lastly, no foreclosure laws existed. But we still saw a niche. The housing shortage in India is so acute, and there was a demographic shift happening as people began moving away from joint family systems towards nuclear families. Being a startup venture, we realized that the only factor that would give us incremental business was quality of customer service. So building a customer-centric organization became our focal point. But to do this, we recognize the importance of building a cohesive team within the organization. One cannot expect a disgruntled employee to serve a customer well. So the example had to be set from the top. The tone had to be given from the top. HDFC built its businesses over the years on the principles of fairness, transparency, integrity, and efficiency. Again, when we look to employ people, we did not seek to hire individuals from the best of the educated institutions, simply because we knew that there were overtly ambitious individuals who would not stay for long in any company. We consciously looked out for individuals who would grow as the organization grew. And we always believed that we hire ordinary people and make them do extraordinary things. Today, most of our senior management have almost spent more than 20 years in the company. Over the time, Our brand became synonymous with transparency. Our brand became synonymous with trust. And we capitalized on this and became a financial conglomerate with interests in banking, life insurance, property and casualty insurance, asset management, venture capital, brokerage, and the rest. So when I look back, I realized that most of my leadership skills were honed because I was fortunate to have been mentored well. From my early days, I learned that the higher one's position is in an organization, the more important it is to be approachable to all the employees. Staff members are the ones who interact with customers and are the ones with their feet on the street. So their feedback is absolutely critical and crucial for the business strategy. But to be approachable to one's staff when they need you, one has to be humble. In fact, humility is essential for self-preservation. Now, before I conclude, I would like to elucidate on what it would take for India to assume a leadership role along other countries in shaping the emerging world order. As a leading management consultant, Professor C.K. Prahlad said, and I quote, India's need to focus on tapping the fortune at the bottom of the pyramid. And I repeat, India needs to focus on tapping the fortune at the bottom of the pyramid. Put simply, this means that we have to stop looking at the poor as victims, but recognize them as creative entrepreneurs. Recognize them as value-conscious consumers. It may be meaningless to rejoice over India's economic growth story unless efforts are being made to bridge the divide between the haves and the have-nots. Inclusive growth is not only about providing credit to less fortunate families, it is also about being able to create jobs and thereby generate wealth. 60% of our population still lives in rural India. So there is a huge untapped potential and untapped market as well. Inclusive growth would mean stepping up the provisions of basic education and healthcare facilities. India has earned its credential as the world's largest, though the noisiest, democracy. It has established open, diverse, and tolerant culture, and most importantly, Indians have comfortably embraced globalization. Amongst emerging economies, the weight of leadership may fall on India's shoulders, and the country should be geared to take on this responsibility. The challenges in the country still remain enormous and immense, but so are the opportunities. Thank you.
Mr. Parekh, thank you so much for that inspiring speech about humbleness. You're rightly proud of what HDFC, your company, has achieved. You're clearly part of one of the greatest national transformation stories of our time, and we're very grateful for your insights. Questions? Madam.
Good morning, sir. This question is in regards to how developing nations have a role in the international community. Countries such as India, China, or even Southeast Asian nations, they have developed, at least in certain regions, to an extent where we are now able to enjoy what the West has been enjoying for decades already. And now they're being asked to be responsible in the global economy by having much more open economic policies and having more role in the environment, which is a great thing. However, I have to question if these nations can really be good leaders that can work with current existing leaders, especially since the West is still looked upon with skepticism in terms of what they want the developing nations to do, such as perhaps being more responsible in their energy usage. And also nationalistic spirits, such as in India, run really high, where even for international organizations to enter, I think, for example, Calcutta was a recent case where the people were just not willing to move away from their farming or their rural environment and develop. So therefore, I really question whether the developing nations can really be good leaders in the future.
Well, it's a good question. If the country chooses to be a democratic country, it has, with the democracy, it takes some issues also. Democracy means consensus building. Democracy is exactly opposite of dictatorship. So, to be able to play a leadership role in the global economy, we have to educate our people. We have to be broad-minded. We heard the Japanese minister talk about we do not want protectionism. We want to fight for open trade policy. We want free trade. We want open barriers. We don't want restrictions. And unless the education level of the senior people, of the politicians, and the bureaucrats in a country are broad-minded and are visionary, India cannot, or any developing economy cannot really play a leadership role in the West. Also, I don't agree that developing economies look to the West with skepticism. Maybe certain class of people who do not have the full picture or who are not well educated and who have not been properly talked about. But items like climatic change and environment efficiency and clean green energy, these are subjects which are taking everyone's concern, at least the educated people. As I mentioned, we have a huge task in front of us to educate the people and to bring the people above the level of, improve the standard of living of most of our rural Indians. And this is a humongous task of improving the growth of India. But I don't entirely agree that we look at West condescendingly, or the Indian politicians look at West condescendingly. I think the attitude has changed in the right direction, and I think the politics are, I think even on the WTO, we may have taken some tough stands in the past, but it is just to protect our agriculture, it's just to protect the rural community, because 60%, 65% of our people live in villages.
We have a question here.
Hello, my name is Dave. I'm from Singapore. I'm an Indian but study in Singapore. So you said that India needs to focus on the bottom of the pyramid and encourage the people to be entrepreneurs. So may I know what kind of incentives and what infrastructure and what support is available for entrepreneurs in India? Because traditionally India has not really been known as a very entrepreneurial country, firstly. And secondly, you said that India has a very wide pool of talented English-speaking labor. But in India, there's also a problem of brain drain, that because they're skilled and they speak English, they easily find jobs abroad, like in the US and the UK. So what steps do companies such as HDFC take to deal with the issue of brain drain? Thank you.
If I take your second question, brain drain used to be a major issue. But thanks to the global slowdown, the kind of CVs I'm getting, that many. I've just come back from the US. I was there for 2 days, and about 6 students met me who have lost their jobs or on the verge of, or probably will lose their jobs and want to relocate. We have seen large number of Indians returning back from all over the world because of safety and security of jobs in India. It has been a major problem because we spend billions of dollars to send our students abroad to educate themselves, and many of them, 90%, don't come back. So this is particularly true, particularly in the science and technology sector. But with the growth of IT industry and with the growth of outsourcing industry, the brain drain, I think the return of Indians, educated Indians, has also been welcome and is seen in large numbers. So I think it's a problem of the past. And if you make a climate in India, a work environment in India which is conducive, and where jobs are easily available, many more will come back. But the task is on us to give opportunities to young Indians who have aspirations to come back to India. On the first part about bottom of the pyramid and what incentives does the government give, you see, it's a very broad question. And let me tell you, most of the IT companies, and I can name 10, 15 of them, the top 10, 15 companies started in a garage. Started as a workshop in a garage with 3-4 people having an idea that let's try and do some outsourcing, or let's try and do some software development or IT development. And that's how they become big and bigger. and they have become global companies. Many, many IT companies, particularly it is true in biotech, particularly it's true in IT, in outsourcing. People started with 6 people doing an accounting job for some US companies, and now they have 6,000 people, or even indeed 60,000 people. So there are facilities given by the government. There are facilities from the private sector. There are banks that give venture capital. There are banks that give angel financing, angel funding. Private equity is there if you want larger sums of money. Over and above that, each state government has an industrial corporation, industrial finance corporation, which is supposed to give money to local entrepreneurs. Now, it's not easy for them. You have to have a good business plan. You need to convince the bureaucrats that your project is viable and that funding is still available regionally with different. Each state has a state finance corporation whose job is really to encourage local, state-level, small entrepreneurs. So there are systems. I agree it's not very easy. It's not everyone cannot get a venture funding or a private equity funding, but the seeds have been sown and the facilities are available.
Thank you so much, Mr. Parekh. I promise to let you out at 10:40. We're on time. Thank you.